Okay, quick Wednesday morning radar update. So we're bouncing back into the gap area today. Let's just look through a few markets before we go into the volume leaders. TLT. So let's just cover. Remember that I do this a lot. Story zone. Do you remember the story zone, negative interest rates and all that? And that was that the louder the story gets, the more likely the stories are running out of gas. It's played out. And this zone here, it had another move, didn't it? Pulled back in and then off it went again, and then it. This is where all the shouting and screaming goes on, and it just drifts back into the range. Now it's about interest rates rising, and are we in the shouting and screaming area yet? I'm not sure, but you could sort of just say, normal business will prevail is basically from extremes on stuff like this. Let's just quickly have a look at the dollar bull. Obviously on the other side of the seesaw to the commodities, which the metal stocks are on volumes, not on volume, but on in play. Sorry, still in play. Remember where we was focusing about? They were telling you all the metals were rolling over here, and it's just a normal pullback, as they did probably here. Some of these haven't really recovered the full extent yet, but this area here is maximum reward to risk. And where is it now? It based out and then it's broken out again. So one market does not make a trend, but they're in play, so it is what it is. Moving on from there, let's just jump straight into the volume leaders. Yesterday was the old widespread, everything sort of being treated the same day. So, days like that, not much to do. You're not going to find much in the bullish screens. I still run them, and I have a little bit of a psychology talk usually on days like that and drop it in the chat. So, in the reality of these things, I'll try not to go down the old social media sort of commentary, sort of what we look at, but one day off highs, and yes, the markets will stair step. Who knows where the the pullback will commence, but all the way up. In fact, they started talking the top in this market from around this area here, and all it's done is grind since. So you've got to have a methodology to be able to sort of. I'll say it again. I learned to trade in a bubble. I didn't have any of the social media sort of influence in my investing, trading. I invested since I was a teenager. Never had any influence from anyone, barring close family. My methodology, I trade today. I have absolutely no influence from the outside sort of opinions. I just trade my own edge, and I just repeat it. And the fight is to sort of keep all the noise out of your edge. You've got a perfectly good edge, and it's getting eaten away by noise if you let it. I always time these morning radars badly because Homes Under the Hammers on the TV, and that will teach you more about investing than any sort of social media platform will. Watching people trying to turn a book on Homes Under the Hammer, and that's what I have on. I don't have any financial noise on the TV. So it's going to make days like yesterday, it's going to make them a lot easier. Also, there's a tendency, everyone does it, me included, looking at the P&L, looking all-time highs on Monday, big push through all-time highs, when you're getting big pushes up, you know there is no 10 steps forward, 2 steps forward, 1 step back, 3 steps forward, 1 step back, you know, 2 steps forward, 1 step back, 2 steps forward, 1 step back, 4 steps forward, 1 step back. You know, that is the reality of what you're dealing with here. So there's a lot of noise, you know, on going to cash and selling positions. You've got to remember, you know, the game's about getting invested in trending stocks and riding them out. And, you know, a lot of people will go into cash here before the move. I was trying to get invested here. I didn't, you know, I bought my first trade in this box area here. So on the trend longer term portfolio is basically what I'm saying. It took that long for the stocks to start breaking out. Anyway, moving on. A little bit of a psychological sort of talk for the public update today. So I'll just go into the large cap. It's 10.25. We should have traded 28% to be on average volume. That will be about 43% to be on conviction. There's a few on conviction. I'll just punch 28 in. And I'll do these in order of volume because obviously something what gaps up like that, you know, fantastic if you got involved with this one. I don't tend to swing trade these. It's 250 stock, so it's more of a swing stock in my world. I don't tend to swing trade so much the healthcares and the pharmaceuticals because they tend to trade quite choppy. I'm presuming this is a bid. Yeah, there you go. But you can get paid nicely on these things if they work out. So let's just buzz through these. Saga basing out there. It's a return to profit, recovery sort of stock. I will just talk about SDI again because, you know, future on volume. I have a position in this one, as everyone knows. I bought it on one of these days here, and it's kind of got a little mini base here. I'm going to take that off because reverse psychology, if I draw a line there, it won't break out. But, you know, anywhere in the right hand side is very normal. It looks pretty good to me. Let's move on. Nice to see it. One out of the portfolio on volume today. Yeah, SDI, we talked about the noise of, you know, that when the sort of it gets into that story zone where everyone sort of starts to talk about it, you know, the market likes to just it likes to test the steel and the nerve of these people who buy on news days is the best way of putting it. Who chase news days, I would say, aggressively. Those are the first ones to puke. So, into the small caps. What did I say? 28%. Let me just see if it's in there. There it is, yeah. So, over and over again, first things I will say, get on, you know, your position size on the linear chart, you know, for multiples of risk. You know, it's a great trade for us. No matter what happens here, it's still okay. Worst case scenario, it's a good trade. And then get on the log scale to manage your positions. Spread bet charts don't have log scales. I did click on a log scale on a well-known spread bet chart, and it wasn't actually a log scale. I don't know what it was, but the logarithmic scale is what you want to sort of look at, because it, you know, I'll just show you this. Put percent up. So if I show you the volatility of this product while it was, you know, in this this is a tighter base as well. You know, it's definitely getting on for 20%. That's normal volatility, and you know, lo and behold, at the moment, it's within normal volatility. I will say a deeper base will go down here. That's pretty normal to test into this area, even all the way down to 130. I've already talked about it so many times before. Is an extremely normal area. So depending on your psychology, depending on what you're trying to achieve out of a trade, you know that, you know, a lot of people will puke between now and there. A lot of people will puke on this. It's amazing how many people think a 10% stop is going to cut it in a small cap stock. It's not. You know, you can't ride a trend with a 10% stop. It doesn't work like that. So, you know, this is extremely normal, and you know, if it wanted to test these people here, it wouldn't surprise me. A little spike down into that area. But at the moment, it's extremely normal, you know, pullback at the moment. If the market went into a hard sell down, you know, these stocks will, you know, go deeper. That is the reality. You have to suck it up and plan for it. So, moving on. Got to be a realist, you know. What do they call you, a D-ramper or bear? You know, no. I'm sort of long. You know, I've got a fantastic trade running long on SDI, but I'm just a realist. You know, I look at how stocks trade and I accept it. You know, that's the game. If you can't accept the normal volatility of the stock you're trading, well, you're in the wrong stocks. You'd have to go and trade funds or REITs or something like that. So let's just buzz through these and a lot of these metal stocks are still in pullback areas as well. They've not even started to move. I know JLP sort of led the charge higher last week. Metal Tiger sort of came to life as well, didn't it? So quick buzz through these. Nothing strikingly jumping out at me there. What I'd be interested in. A lot of work has gone into the GTRS yesterday. I've actually done the old list consolidation. I was surrounded by pieces of paper. Basically, I put everything off that piece of paper onto one piece of paper, and then I try and work through it. So I've been doing that this morning, and I'm in the office and it's just so dusty. I think the sun's out as well. Not much to do today apart from just get on top of a few jobs at home, I think. Okay, I will leave you there.